You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. And as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at VIP Mortgage. When you are ready for that new home, we talked about that a lot in the last segment. VIP Mortgage, they've got the products that you need for that new home. Yes, they've got the VA, the FHA, conventional loans. They've also got some of the more exotic ones that are great for the right people. The reverse mortgage, they've got 1 day out of short sale, 1 day out of bankruptcy, 1 day out of foreclosure. They've got some special loans if you're a business owner, first-time home buyer. All the programs that you could possibly want, they've got them there. But we want to talk about, I like talking every once in a while about terms, because there are people that just don't know the terms that go into the real estate environment. So I figured I would share with you a few terms just to help. I don't know. Here's the issue. I just got an email just about since I've been on air this morning, and it was basically asking, Ron, what goes on now? I see that my loan was approved. What's the next steps? And so many people don't understand the terms that are involved in the mortgage industry. So I've been trying to spend a little bit of time just chatting about terms so that you understand them. We spoke about searching, about loan shopping, and that was just an issue that a lot of people don't understand. And I had shared with you the concept of people going out and doing a double application. I'm not a big fan of the double application. I think you do your due diligence up front, and then once you make a decision, unless there's something shady going on, you go with that decision. But there's a lot of confusion about locking your loan. When does the interest rate get fixed or set for your loan? So I want to share with you a little thought about that. I started last week talking about this a little bit. We just didn't have enough time. A loan lock is basically the time when the interest rate on your loan is set. So you can go shopping all that you want. And you might call somebody today and they're going to tell you what the interest rates are today. And you call somebody tomorrow and you might even call the same person tomorrow and they give you a different interest rate. And you look at it and you say, holy cow, what's going on here? Why do you give me a different interest rate every time I call? You might even call somebody in the morning and then call them back in the afternoon and get a different rate. You could go online and see that there's different rates in the morning versus the afternoon. Those are all very, very normal situations. Because interest rates change as frequently as the bond market, the stock market. They're changing all day long. Sometimes they don't change a lot. Sometimes they do change a lot. It just depends on the volatility of the stock market. So you go in there, how do you make a decision? How do you deal with it? Well, that's what you do is it's called a rate lock. And a rate lock on the lender's side is basically the lender goes to an investor or goes to their, I don't want to get too complicated, let's just leave it with an investor or with their bank where they get their money from, their investors, their warehouse line of credit, whatever. And they put in a reservation. So say you need a $400,000 loan. They go to their investor and they say, we're going to be doing a loan and we need to reserve $400,000. Today's rate is 3.5%, 3.75%, 4%, whatever the number is. And we're going to need that money sometime in the next 30 days. They might say in the next 45 days. They might say the next 60 days. The longer out it is, the more expensive it's going to cost them to get the money. So they put that lock in there. That's when they've committed to you, and they're going to send you a disclosure saying, Mrs. Jones, we are committing to you that we will lend you $400,000 at 4% interest, 30 years fixed, as long as we can get this loan closed in the next 30 days. And they'll put right on there what day that loan expires. Now, can they raise that rate? No, it's a commitment. There is a possibility that if the market goes down enough, they might be able to renegotiate that rate and save you a portion of the downward benefit. Not always, but they might be able to save you a portion of the downward benefit. So here's the issue right there. I'm going to share with you my personal opinion. Unless the market is ultra volatile and you need a great mortgage professional to help you navigate either way, I'm going to share with you, if you like it, lock it. When you talk to the person that you've done your due diligence with and you've narrowed down the people that you're looking or considering doing a loan with, you've narrowed all that down. I'm going to tell you that if you like the rate that they have at that time, lock it. Why? Well, that protects you, and I don't like risk because the market could change. And I'm going to share with you in my years and years and years of experience of being involved with financial services. Rates always go up faster than they go down. And they go up without warning. So you could be looking and saying, okay, today's rate is 4%. And again, I don't know what the rates are. I'm just using a hypothetical number. So today's rate is 4%. Something could happen. We're seeing right now issues in North Korea. We're seeing issues in the Middle East. There could be geopolitical issues. Something could happen, and the stock market could spike, or the bond market could tank or spike or whatever. Rates go up faster than they go down. If you're locked in, you are protected. Now, I'm going to give you a little caveat there, because back in 2008, there was a whole host of lenders and mortgage companies that went out of business. There was a whole host of banks that went out of business. So they could not honor their rate locks if they went out of business. That's why you do your due diligence up front, and you don't go with these fly-by-nights. Many times I hear them on the weekend radio, and I don't put anybody down, but I don't like the information that sometimes they share because they want to hype you into making an emotional change. Well, you've made a decision to find the person that you can work with and who's giving you great information. The difference between a 4% interest rate and a 4 1/8% interest rate or a 3 1/8 interest rate is not a significant amount of money as compared to the life of the loan and the amount of interest you're going to pay. You're going to pay hundreds and hundreds of thousands of dollars on a $400,000 loan, the interest on that over a 30-year period. Hundreds of thousands of dollars. The truth of the matter is you're probably going to keep your loan 5 to 7 years. That's the average in our country. $20 over a 5-year period is about $1,200. But if that loan individual, the person that's helping you and guiding you as to when you should lock or when you shouldn't lock, can give you some guidance on one day or a better day to restructure your loan 6 months from now or a year from now. They're keeping up tabs on you. They're doing an annual review with you. They're looking at your household situation. They're studying and advising you on the debt side of your balance sheet. Is that worth $240 a year to you? I suggest in many, many instances, it may be worth more than $240 a month to you. But a lot of people will say, you know something, I want to get the lowest rate possible. And I completely understand that, and God bless, go do it. But for the right people that understand there is value in great guidance and value in somebody's experience, just like in your job, you have value in what you do. I suggest to you find an individual that can help you the best way possible and go to work with them and get a loan. That's the Real-Time Real Estate segment. Again, that's being brought to you by our friends at VIP Mortgage. And I'll share with you, I'll be very, very frank with you. I have worked with many, many different mortgage companies. I believe that a mortgage company needs to be working for you the individual. And as right now, I believe the best one out there is VIP Mortgage. That's why I reference them so often. That's why the team that I work with on mortgages is with VIP Mortgage. Just for that one simple reason is that they're the best out there. They giving you the best guidance, giving you the best understanding, teaching you, sharing with you, leading you. Just my personal opinion right now. And the reason that I've been with so many different companies is I make sure that they're staying that way for you. I can't claim to be a consumer advocate if I'm just getting paid by somebody without doing any due diligence to see if it makes sense and it's in your best interest. Again, that's just my personal opinion with a lot of experience and a lot of years of doing this. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to have a little bit of conversation about the reverse mortgage world. Who's it right for? Who benefits from it? Why are there so many myths about it? You can reach me anytime. Call our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel, and like 250,000 other people, if you want to catch any of our replays, RonSiegelRadio.com. There's an archive button, or Ron Siegel 1, the numeral 1, on YouTube, and you can catch any of our prior broadcasts. Stay tuned. We will be back in just a few.